Welcome back everyone to Money Control live stream. You're watching markets with Santo minus CJ. We apologize for the late start due to some technical issues and a quick look at how the market's faring at this point in time before we head into the stocks on our watch list. Now, benchmark indices have managed to bounce from the day's lows. The Nifty is now down by just about 0.5% after being down by more than 1% earlier in the day. However, mid caps and small caps continue to be under pressure. That's where the big selling is happening at this point in time, and a similar trend was witnessed on Friday as well. So the weakness in second line shares continues at this point in time. On the whole, sentiment is fairly it's not exactly bearish at this point in time, although markets the players are a bit cautious. However, there is a slight positive undertone to the sentiment at this point in time. The usual story being that India is still a much better place than many of the other developed markets at this point in time and should continue to attract foreign fund flows. But irrespective of whether foreigners are putting money in India or not, we are seeing some really good inflows coming from the mutual fund side, and the inflows for the month of September testify to that. Net inflows into equity schemes were about 14,000, a little over 14,000 crore compared to a little over 5,000 crore the previous month. So what this seems to indicate is that at every lower level you are seeing good buying support coming in. And let us then quickly move on to the major stocks on our watch list this afternoon, and we start off with Paytm. Now, the second quarter business update by the company was quite robust there. The number of loans disbursed during the quarter was up about threefold. The value of loans disbursed was up about fivefold, and the average ticket size, that also saw a huge jump there, about up 80%, and monthly transacting users, that number has also seen a significant improvement, up 40% to about 8 crore. Now, these are the positive sides, but however, there is still some cause for concern, and that being that the lock-in period for pre-IPO investors will end sometime next month when the 1 year period is over, and that is probably when you could see many of those who have not got a chance to sell probably coming out to sell the stock. Now, remember, Paytm shares have been underperforming ever since the day of listing. The issue came in at about 2,150. The stocks are down to about a little over 700 rupees, 732 odd rupees at this point in time. Good run up in the stock price over the last 1 month, close to about 100 rupee jump there, and some of the business metric here seem to support that kind of a rebound that you've seen in the stock price. However, there is technical factors in play at this point in time, and mostly that is what could possibly keep the stock price under check at this point in time. Well, CJ is not here at this point. Had he been there, he would have repeatedly again harped on the fact that how there is a consistent improvement in the company's operating performance. But that said, we cannot completely rule out the overhang at this point in time, because we had seen something similar in the case of Zomato also. As soon as the lock-in period had ended, you saw a huge wave of selling, and that pushed the stock to down to about 40 rupees. Now, there is concerns in the market, and even some brokerages like Goldman Sachs have flagged that issue, saying that the ending of the 1 year the lock-in period could be some kind of an overhang for the stock in the short term. On the positive side, the company has said that the regulations for digital lending, they are pretty much progressive, and what the company is doing at this point in time is very much in line with what the RBI has prescribed. The next stock is Zydus Life. Now, this stock again has been seeing some renewed buying interest over the past couple of months. The stock had peaked out sometime in November last year, and since then it's fallen quite a bit, but again we are seeing some bit of renewed interest in Zydus at this point in time. Is up about 20% over the last couple of weeks. Now, US accounts for close to about 40% of the company's revenues, and since August 31st, the company has got approvals for 8 ANDAs, which is abbreviated new drug applications. Now, that's a major thing for this company, mainly because, as I said, 40% of the company's revenues come from its US sales. But that apart, there are quite a few other factors also in favor of Zydus Life Sciences at this point in time. Also, the company is working on a robust pipeline of complex products, including injectables, transdermals, new chemical entities, biosimilars and vaccines, and according to brokerage house Prabhudas Lilladher, the impact of all this will be seen over the next 2 to 3 years. Next stock on the watch list is JSW Energy. Now, the stock has been facing resistance around 359 rupees. It's made a double top at that level, and it remains to be seen if it will be able to get past this time. Again, good rebound over the last couple of weeks. Now the company had recently acquired Mita Energy and it as part of the acquisition it got about 1.753 gigawatts of renewable energy. Now that leads to an increase of about close to 35% in its installed capacity. That is an immediate jump, and besides that 2.5 gigawatts of projects are already underway at this point in time. That is mostly in the renewable space, wind as well as hydro projects, and these are likely to be commissioned over the next 12 to 24 months, which will again take its overall installed capacity to about 9.1 gigawatts, and the target by FY25 is about 10 gigawatts, and at this stage the company appears to be comfortably placed to reach that target, and by FY25 close to about 65% of the company's installed capacity will be in renewables. Besides these, the company's operating margins are close to about 34%, and also the company has managed to reduce its borrowings by close to 5,000 crore rupees over the last 5 years. Next stock is Karur Vysya Bank. The key triggers here are a consistent improvement in its asset quality. You have already seen some glimpse of it in the first quarter numbers, and this trend is expected to continue according to analysts tracking the stock at Money Control Pro. The biggest positive has been the slippage that the bank has reported net negative slippages for the fourth consecutive quarter during Q1, which basically means that the bank is able to recover a lot of its bad loans, and this overdue book is moderate at this point in time at about less than 0.5%, and the overall net NPA is targeted to be less than 1% at the end of the year. And according to Money Control Pro, the adjusted book value for the company, for the bank by FY24 is expected to be about 1.08. Right now, it's trading at 0.63 times its adjusted book value for FY24, and there is scope for re-rating from these levels. Last stock on a watch list this afternoon is Tata Motors. The stock is among the biggest losers in the Nifty at this point in time, down by close to about 4%, and the trigger for that has been the downgrade by JP Morgan. The brokerage has downgraded its rating on the stock from overweight to neutral, and according to JP Morgan, the major reason for the downgrade is that the deadline set for deleveraging at JLR is not seem to be panning out quite the way it should have been. Also, wholesales were expected to come in at about 90,000 for the second quarter, but they have missed it by a fairly wide margin. It has come in at close to about 75,000 units. Now, the good thing about Tata Motors at this point in time is that overall the India business appears to be doing well, and that is providing some kind of a cushion to the stock. However, there is no denying the fact that Tata Motors clearly has been one of the underperformers in the auto space over the last many months now, and the company has been reporting losses at the net level for quite some time, and that is what seems to be holding most buyers back at this point in time. Now, the stock had seen a good run up after it fallen to close to about 60 odd rupees during the height of the COVID selling, and a major re-rating did happen. The stock topped about came close to hitting 500 rupees, but since then it's not been really performing, and investors are waiting for some kind of improvement in the company's fundamentals before they start betting on the stock big time again. And with that, let's take a quick look at the market at this point in time. Sensex is just a shade below 58,000, and it's still managing to stay at that level for quite some time. It's trimmed the early losses, and you're seeing good buying support in frontline stocks today. That does not seem to be the case with second line stocks at this point in time. And what are the key things to watch out for tomorrow? So, earnings season will continue to be the focus. TCS will be reporting its second quarter numbers in a few shortly in about an hour from now. So, that will be the stock to watch out for tomorrow. That apart, we've got two key earnings coming tomorrow. The one is by Delta Corp. The stock has been quite volatile over the last few weeks, in fact over the last few months, and the other one is GM Breweries. Well, that's all that we have in this edition of Market with Santo and CJ. Thank you for watching, and with that it's a wrap, and see you again at 9 AM tomorrow. Please do share your feedback in the comment section below.